Good morning guys, this is Naimas, I'm Chief Market Analyst at AvaTrade. In today's segment, we're really going to look at the European session and really see what exactly is driving those moves. Because the US futures started off on a back foot. The investors literally picked up the momentum from Asia, and where they actually failed to pick up where the US left things. Because over in the US, we saw those record highs. The Dow Jones, surged more than 275 points and recorded those new ultra highs that we've never seen in the markets before. And of course, the moves were pretty much replicated when it came to S&P 500 index and the Nasdaq as well. So it was like, just not one particular index leading the rally, but actually all the three indices were supporting that rally. And this entire optimism was fueled on the back of this, that okay, the coronavirus infection rate has been, is taking lower, and on top of that, there is also control on this coronavirus as well. However, with the new technology employed, new methodology employed over in China, that figure has completely blown out of proportion. Because yesterday, one of the highest infected province, it reported a very high death rate and infection rate, unfortunately. Now, what that did in the market over in Asia, investors were like saying that, okay, this has come at a time when they were not really expecting it. They were just like, okay, the worst is over, now the market's gonna get back in. But that doesn't really happen, because what we're seeing in the European markets is that the investors are on the back foot, and the VIX index, which plunged. Remember, VIX is, by the way, is a volatility index for the S&P 500 index. For those of you who don't know, it plunged nearly 10%, well over 9%. And I'm expecting that index to move back up today, because it crossed its 50-day moving average, it crossed its 100-day moving average, it crossed its 200-day moving average on a daily time frame. So I'm expecting that I'm expecting some of that losses to be recovered today, because if investors remain on the back foot today, and if the risk of sentiment is the main game in town, and that remains the case, because it can always change. Remember, traders change their momentum, they change the optimism and pessimism very quickly. They can very well say, okay, new methodology, it was expected to, the surge in numbers was very much expected, nothing that new in that particular number, because China is really doing a lot, there is no doubt about that. And if that is the sentiment which continues throughout the day, then I'm expecting the VIX index to continuously move lower for the rest of the day, and it can come into that support zone of 1350 to 1325. I've just put out a special video on that, on the technical analysis, so do please have a look on that. In terms of our economic numbers, we do have the US inflation number coming out at 1:30 UK time. Core CPI is expected to tick higher to 0.2% against the previous reading of 0.1%. But the headline number, CPI month on month, still gonna stay at 0.2%, meaning no change in Fed's narrative with respect to their monetary policy. But for now, I'm very interested the move in gold, because obviously the risk of sentiment brings all of that money flow back in gold. And in the commodity space, we experienced this massive surge in the oil prices, but no longer today, because guess what? Even when OPEC said that yes, we are going to we're going to change our forecast with respect to our demand, and then they cut that by nearly 600k or so. Still not that enough, because if China is going to keep curtailing its supply, that means we have it's going to keep cutting its supply from its producers, and that means that we have feeble demand and ample supply. That's all for today. See you guys tomorrow.